Ladies and gentlemen, dear guests, let's continue with a panel that dives into Super ESCO models and their role in unlocking investment at scale. Moderating is Ms. Svetlana Adamek, Managing Director of Adamek and Adamek Consulting, again very strong woman. And our speakers, Mr. Suhaib El Marzuki from Taka, United Arab Emirates, Mr. Alexander Ablaza, Klimarji, Philippines, and Mr. Pierre Langlois from Econoler, Canada, and Mr. Mehdi Benjelloun at Tijari Capital Management, Morocco, and Mr. Arden Rodriguez, National Energy Corporation from Trinidad and Tobago. Please welcome our panelists.
Where's the clicker?
Are we on? We are online. Hi, everyone, and welcome to today's panel discussion on aggregating and financing through Super ESCOs here at the second ESCO Symposium in Istanbul. My name is Svetlana Adamek, and I will be moderating the session today. I'm a senior advisor on ESCOs and Super ESCOs, and also I'm member of the advisory committee of the Global ESCO Network. This panel is about something I care deeply about. This panel is about exploring how Super ESCO can truly unlock energy efficiency at scale by aggregating projects, reducing risk, and enabling financing solutions that work in both emerging and mature markets. We have a fantastic group of panelists with us today, representatives from public and private Super ESCOs across very different context, market context, and regions. Each will share their insights and experiences, and then we'll open the podium for discussion and for your questions. Now I would like to ask each panelist to briefly introduce himself. Just say your name, your organization, and your current focus area and role related to energy efficiency or Super ESCOs. Let's start with Suhaib, then Alex, and go from there.
Thank you so much, Am I online?
Yeah, yes.
Okay, that's perfect. First, it's a pleasure being here. Thank you very much for hosting us here. I'm Suhaib El Marzuki from Taka Energy Services. We are the Super ESCO of the Emirate of Abu Dhabi in the United Arab Emirates. So basically, we were created to serve a bigger purpose, which is enabling the energy efficiency market in Abu Dhabi in particular. And our main driver is to create a healthy ESCO market in the Emirate by creating equal opportunities to all the ESCOs in Abu Dhabi and United Arab Emirates, and to enable the government sector to be onboarded fully on ESCO projects and play a pivotal role in managing, funding, and supervising the ESPC across the government sector and the private sector in Abu Dhabi. So we play a very interesting role, we being part of the utility sector. So basically, we are with the same family of the water and electricity distribution sector in Abu Dhabi, being it is the only, I can call it a monopoly utility provider in Abu Dhabi, and we play a role there to reduce the demand on the water and electricity on the grid.
Thank you.
Fantastic. I'm Alex Ablaza, but I wear a different hat this time. After lunch, I was wearing my nonprofit hat, but now I'm wearing the hat of the head of Klimarji. Klimarji is possibly Asia's pioneer, privately owned Super ESCO. And it was born out of the frustration that I had when I was a development banker. So I used to be the energy efficiency anchor of Asian Development Bank and then moved up to IFC. And I saw that the ESCOs were not getting, as Clara has very much confirmed, and I love that finding of the Global ESCO Market Report, that ESCOs around the world, and I would even say developed and developing countries I have difficulty in accessing project capital. So I'll talk about Climergy after the introductions.
So, hi, my name is Pierre Landlot. I'm the president of Ecolair, so I wear a different hat as well now. In the last 5 years, my main concern related to energy efficiency and SuperESCOs was the creation of the first and the only one SuperESCO in Canada and in France. It's called SOFIAC. So in the last 5 years, we're able to raise $1 billion to essentially implement these projects. And as Alex was saying, part of my experience working with ESCOs around the world was the fact that each player has to play a role, but very often we mix the roles of everyone. So we think that an ESCO is a bank. We need that a bank has to take the technical risk. We need that the client is supposed to take the loan and so on. So we essentially try to design something based on a request from the government. The government came to us at some point and said, well, we want to increase energy efficiency. We want to increase carbon emission reduction. We don't want to increase our grants. Because in Canada, we're a rich country and we use a lot of grants. But still, at some point, there's a limit of how much grants you can use. So they said, how can we do that without having the government being involved? So we create that vehicle, SOFIAC, the SuperESCO model, as Svetlana presented it, and essentially raise capital. And we essentially designed it in a way that every player is playing its role. The bankers, the investors are playing the role of the investors and the bankers, the ESCO are playing the technical role, and the client is taking its own risk, which is operational risk. So we'll talk a little bit more. That's been my main focus as far as that activity, on top of working with some of these gentlemen in the last few years, really funding and starting up these kind of initiatives.
Mehdi.
Yes, hello everybody. My name is Mehdi Benjeloun. I'm Deputy General Manager of Tijari Capital Management. Actually, we are managing the Fonds Africain d'Efficacité Énergétique. It's the first Super ESCO in Africa. The first Super ESCO. For the first stage, we address Morocco, and in the second stage, we will address other countries like Ivory Coast or Senegal. This fund has been raised with Ecolair, and as introduction, it's only about risk allocation. The Super ESCO model is finding the right risk allocation to have the projects done. We will enter into the details in the panel later.
Arden, over to you.
Hi, good afternoon, everyone. My name is Arden Rodriguez. I'm from Trinidad and Tobago. I work for the National Energy Corporation of Trinidad and Tobago, which is a gas utility company. And I lead the project manager in the launch of our SuperESCO. So right now, we are in the pilot stage of the SuperESCO project that we are developing in Trinidad and Tobago. And we're working with our consultant in developing that SuperESCO. Just some background on Trinidad and Tobago for you all. Trinidad and Tobago is a small country, 1.3 million people. Our NDC goal is about 30% reduction by 2030. But we have a heavy energy-intensive economy. We have a lot of methanol, ammonia, LNG production in Trinidad and Tobago. And most of our natural gas goes also for power generation and stuff like that. Because of that, we have a lot of cheap subsidized energy in Trinidad. Electricity is subsidized, petrol is subsidized, water rates are subsidized. So that's the kind of environment that we are in Trinidad and Tobago, and there are limited policies and laws and regulation with respect to energy efficiency. So that does give you some background on Trinidad and Tobago and an introduction to me. And you over there, Lana.
Thank you. Thank you. Now, before we start and we dive into the today's panel discussion, I would like to take a couple of minutes and to make sure that we all starting on the same page, just to explain what a SuperESCO actually is. And I would like to ask for my slide. Just a second. Thank you. So, a SuperESCO is a specialized entity that aggregates, prepares, and manages energy efficiency projects. It acts as a bridge between financing sources, such as donors, development banks, IFIs, private banks and investors, and the facility owners, whether they are private or public. The SuperESCO has three main functions. First, it mobilizes and channels financing for energy efficiency, often combining initial public funding with co-financing from other sources. Second, it provides technical assistance and advisory services to ensure projects are prepared and implemented to a high standard. And third, it aggregates multiple projects, making them more attractive for investors and implementers, and easier to implement in a standardized and scalable way. Working closely with private ESCOs, which you see on the right side, the SuperESCO enables the delivery of energy-efficient equipment, works, and services to facility owners, who then repay from the energy savings actually achieved under the energy performance-based contract that guarantee results. But why is SuperESCO important? Because it is not just a project implementer. It plays a strategic role on three levels. And these three levels will be operationally, financially, and the market development. Operationally, it scales up projects, reduces transaction and development costs, builds reliable data, builds and maintains a bankable project pipeline, and standardizes processes and contracts financially. Financially, it helps de-risk investments, facilitate co-financing, supports ESCO in gaining access to financing by designing of smart financing schemes and a mechanism for blending of private and public capital. It also leverages the private investments. Last but not least, the market development. The SuperESCO supports ESCO market development and growth. It raises awareness, builds capacity, supports facility owners, and plays a key role in building trust between the public and private sectors. So in short, a SuperESCO is not just a financier or a project manager. It is a market enabler. It is a game changer. And with that, I would like now to hear directly from our experts who are working on the ground in different regions about how SuperESCO are operating and scaling up around the world. Most of our panelists prepared a few slides to help share their perspectives, and after this short presentation, we will move to the main panel discussion and answer your potential questions. So we will start with Alexander Ablaza, CEO of Climergy in the Philippines. Alex, in your presentation, you describe how private capital is largely missing in the energy efficiency space, despite the clear potential. How does your private SuperESCO help fix it, and how private aggregation models are working to close that gap?
Very good. Could I have my slides, please? Well, Climergy is mobilizing equity capital rather than debt capital, and I'll explain why. So let's start with the baseline situation. When I left the development banking world 12 years ago and rejoined the private sector, 4 key observations. Number one, many ESCOs are already existing. They see the unique low-risk opportunity. They see the attractive returns. They see the opportunity with commercial and industrial customers. But they have very, very limited access to project finance and to debt capital to pursue their pipeline of projects. Now, debt and equity providers, energy efficiency for them is high risk, modest return, high transaction cost, because in many banks, they don't have an in-house energy efficiency expert. So they have to outsource the expertise to do due diligence and to do monitoring through the implementation stage. So it's a small deal, but high transaction cost. Now for end users, you know, the large smelters, manufacturers, commercial buildings, shopping malls, unless it's required by regulation, energy efficiency is admittedly a non-core activity. So they would rather use their credit lines or their available capital budgets for new process lines, refurbishment of a hotel section, new kitchen equipment, etc. That is core business. But replacement of boilers and chillers and motors and compressors is non-core business activity. So if I were the CFO of a large commercial industrial estate, okay, I will budget a new boiler replacement, but that will be in year 2031, not this year. For climate investors, you know, it's been discussed in the previous panel that as a former development banker, we'd like to see $50 million, $100 million tranches, right? We can't put money in $2 million chiller replacement projects. And so it doesn't have that size. So why Climergy? We address that market failure. First, my work across Asia and the Middle East, I see that 98% of ESCOs do not have suitable access to bank lending from state-owned banks and commercial banks. 98%. And the 2% are large government-owned ESCOs or multinational ESCOs that are able to draw inexpensive debt capital or have huge equity pools. But the 98% are SMEs. 98% are one electrical engineer and mechanical engineer teaming up, very bright consultants, but they don't have the deep pockets. So that's the situation in both developed and developing countries. So I see that problem in not only the Cambodias, the Thailands, the Malaysias, I see that in Singapore, in Japan, in Korea. So it's not unique, it's not specific to any market. Next, there are no aggregators of ESCO project contracts. There's no one providing de-risking instruments in most markets, and no one is picking up the cost of preparing ESCO contracts. How much is an investment grade audit in most markets? What, 20, 30,000 US? And who's picking it up? Can ESCOs pick it up on their marketing budget? The likely answer is no. Do large commercial and industrial establishments want to pick up the bill? In most cases, no. And in many markets, the excitement, the hype, the exciting capital flows are now going to renewables. They're now going to rooftop solar. And I like what Sule EBRD said in the last panel, but that's not energy efficiency. And we have to remind ourselves, yeah, that's not. It carves into their requirement for energy, but the consumption, the end-use consumption remains the same. So while there's a lot of exciting private capital flows rushing towards this new asset class called rooftop solar, very little private capital is moving towards cooling, heating, motors, compressors, lighting. And the mere fact that you're offering equity capital outside the balance sheet of ESCOs can now focus on what they do best. They're very good electromechanical engineers. But you know what they're not good at? They're not good financial engineers. So they don't know how to recapitalize. And the off-balance sheet equity capital offer now allows them just to focus on what they do best. Give me a cooling solution, I'll buy your solution. Now, for a commercial or industrial building owner, they preserve now their capital budgets and their credit lines for what they call core business. Fortunately, everyone here in this room says energy efficiency should be core business. But that's not the reality in the world out there. It has to compete with other priority core business activities, and any CFO will deprioritize an energy efficiency expense. And like in my example a few minutes ago, while they might be able to have the cash ready for a boiler or chiller replacement, it's going to be 5 years down the road. But the energy manager or the chief technology officer of the enterprise would say, I want it in 2025. So this is why we think that our offer, even while they have the cash allocation, would accelerate energy efficiency project decisions in their premises. And by the aggregation, I don't need to give the structural chart. Lana did a fantastic job of lining up, private ESCOs all being fed through the Super ESCO. But I like to think of portfolio aggregation now, because we can now aggregate our impacts. Yes, we are private sector entity, but we would like to develop developmental, economic, environmental impacts. So it's avoided generation, avoided annual generation on a gigawatt hour basis, 2 gigatons of CO2 through 2040. And the one I like best is that we create the most jobs compared to the renewable sector, compared to oil and gas, compared to other energy, transport, and water infrastructure. We in the Philippines, it's been shown in many other countries, in Japan, Australia, US, and in the Philippines, we corroborated a study that the most jobs for every $1 million is in energy efficiency. In the Philippines, the number I give you is 37.5 jobs for every $1 million. So that's, if you want to prop up the economy of a developing country or emerging market, you create jobs. And that's one of the favorite impact metrics. So I'm happy to dive deeper through the rest of the panel discussion. Thank you, Lana.
Thank you, Alex. Now we will turn to Mehdi Benjeloun, Deputy General Manager at Attijari Capital Management in Morocco, to continue with the private lens, this time from an investor-driven SuperESCO approach in North Africa. Mehdi, what do you see as the main factor that helped your model gain acceptance and start delivering results?
So maybe I will give you an idea about what we have done with the Fonds Africain d'Efficacité Énergétique. All started about what we have seen in the field, that the market, we have a great market of energy efficiency in Morocco and on-site renewable, but a little thing have been done. What we have seen also is that client does not have the internal resources to identify the project, to follow the energy efficiency project, and does not want to spend their budget in the energy efficiency. It's not their job. They prefer to focus on their the main business. And also, the banks are not specifically equipped to address this type of project. So financing is done based on the balance sheet of the client. So based on that, what we have done, we have spent 1 year putting in place this model. First, we go to our investor, telling them that we have ESCOs that can do the work, we have clients with a good project, and that we need the money to have this Super ESCO in place. In second place, we go to the potential ESCOs, because before the Fonds Africain d'Efficacité Énergétique, there was no ESCO in Morocco. Today, we have some. So we are telling the potential ESCOs that they have to be structured as ESCO to go with us to see the client and put the projects in place. And in the third place, we have met more than 50 clients presenting the model of SuperESCO. After more than 1 year and with Econolair, we have succeeded to raise 20 million euro, the first 20 million euro in Morocco, which is just a proof of concept, the 20 million euro. Money is not a problem. Bankable project is a problem, and we believe that with such structure, we can have a really bankable project. So we have raised, we had financial close on September with 20 billion euro. We have some ESCOs on board today that can go with us for the first project, and we believe that we will sign the first contract in the coming weeks or the coming months. So in Morocco, emerging markets, it was really challenging to put this SuperESCO in place, but we did it, and the main challenge now is to have these first references. So our main achievement today is the first closing, 20 million euro. We have raised money from financial institutions in Morocco, from insurances, other banks. The first ESCO are on board. We have put in place also the standard contracts to be signed with the ESCOs, because we are the clients of the ESCOs, and with our clients. It has been a very important challenge because the regulatory framework was not in place, and we had a lot of exchanges with the Moroccan authorities to adapt this regulatory framework to have SuperESCO working. And also one of the main return of experience from Econolair also is that the commercial activity started far before our closing. So today we probably will sign our first contract because we have started the commercial activities far from the closing. That's what we can say about this first SuperESCO in Africa and how we have put it in place, this first closing, and we believe that we will have a success because, as we said in the beginning, it's all about risk allocation. ESCOs are focused on the technical parts, and they are taking the technical risk. They are equipped for. The client does not take any risk, not technical, not financial, and we are mid-term and long-term investors, and we are taking the financial risk, and we know how to manage it. So it's all about risk allocation.
Thank you, Mehdi. Let's turn the lens now to a public sector-owned SuperESCO. Arden Rodriguez is the Assistant Manager of Projects at the National Energy Corporation in Trinidad and Tobago, and will share how a SuperESCO can help build an ESCO market from the ground up.
Hi, good morning, everyone. Good afternoon, everyone. So as I mentioned before, I work for the gas utility company in Trinidad and Tobago. And right now in Trinidad and Tobago, there's, as I mentioned, the price of electricity is heavily subsidized. So the gas utility company, one of the main focus was trying to reduce the amount of natural gas that goes towards the electricity production in Trinidad and Tobago. One of the main reasons for this is, as you can see in the slide, the price we pay for that natural gas gets for electricity is about half the price that the gas utility could sell it to some of the ammonia methanol companies in Trinidad and Tobago. So their focus is reducing the natural gas that goes towards the electricity company because of the price of natural gas. But one of the issues that we saw and reasons why we decided to go for the SuperESCO is that there are barriers to energy efficiency in Trinidad and Tobago. And as mentioned before, there's no policy or regulations with respect to energy efficiency. The market is not developed. The financial institutions are not familiar with the energy efficiency project lending. And we have the inability of government to procure ESCO projects. So the state utility decided to use the ESCO to deal with those barriers. As the Super ESCO can train the local ESCOs, they're credible for the Super ESCOs equity provided, and usually outside of the scope of the Super ESCO can offer longer term loans and stuff like that. Some of the benefits we saw that if we didn't develop a business plan for the Super ESCO, and that some of the benefits we saw that if there was a 10% uptake of some of these projects, energy efficiency projects in Trinidad and Tobago, over a period of 5 years, we could see savings in the amount of $18 million and reduction in energy consumption of about 375 gigawatt hours, and carbon savings of about 287,000 tons of carbon savings. And we would see an increase in natural gas revenue of approximately $12 million. So these are some of the benefits that we saw for the gas utility, which is a state company, to move forward with the Super ESCO project. So over this time, over the past 2 years, some of the things we have done is that we have, as I said, we've launched a pilot for the Super ESCO, and we have conducted walkthrough audits at different facilities, and resulting out of those walkthrough audits, we have signed one EPC contract with a customer, and we're in the process of tendering with the local ESCO industry to implement projects at that client company. We see on average, from the walkthrough audits, we saw on average about 50% energy savings in these local manufacturing companies in terms of their energy reduction and stuff like that. The problem, some of the main problems in these companies is that they don't have the resources internally to implement some of these projects or even to engage the ESCOs locally in getting these projects underway. And then you have the issues with financing. And that's where we come in as a Super ESCO to help those clients implement those projects in those companies. Further, we've also conducted training for the local ESCOs. One of the things that haven't been mentioned, that the local ESCOs, this is a new to the local ESCOs. They're a customer that's going in and implementing projects in companies. So having them do guaranteed savings and sign contracts, we introduced them to this new model of operation, and we are conducting training in local market for these companies over the past 2 years. And and we have, that's where we are right now in the process, and we are continuing the implementation of that project to get approval from our board and the government in terms of implementing a wider range ESCO in the local economy.
Thank you, Arden. And now we will hear from Pierre Langlois, President of Econolair, his perspectives from mature ESCO markets in Canada and France, and how aggregation and financing work when the enabling environment is in place. And one additional question, Pierre, are there elements that emerging markets can adopt or adapt?
Well, thank you very much for this opportunity. And I'm going to talk about the SOFIAC. So essentially, it's a French acronym that would say Society for Financing and Supporting Energy Efficiency Projects. So I'll talk about the case of Canada first. In Canada, we had, for many, many years, a very successful ESCO market. Econolair ourselves was the first ESCO in 1981 implementing projects. Year in, year out, we had about $500 million worth of energy efficiency projects realized by ESCOs. So they are operating ESCOs for a long, long time. But when the government asked us to design something that would go a lot further, we realized that all these projects with ESCOs were done in the public sector. So essentially, the public sector, using the ESCO mechanism, essentially launched tenders and requested guaranteed savings type of services. But when we went to the private sector, most of these projects were not implemented at all by ESCOs for many reasons. One of which is when we talk about energy efficiency, the private sector talks about short-term payback. So we don't like to focus on payback, they do, but very often they focus only on very short-term payback. If we want to accomplish a market transformation, if we want to go deep into the retrofitting, we cannot limit ourselves to 2 years payback. So we have to change the scheme. Furthermore, the ESCOs, as big as they are not banks. And if there's one thing that hopefully everybody will remember out of my presentation is ESCOs are not banks. They're not designed to lend money, structure money, and invest money. They're designed to design projects, implement projects, guarantee projects. Banks and investors are on the other end are not there to guarantee the savings. They're afraid of the technical risk, which is what ESCOs do. So essentially what we structured is we went to these investors, equity and debt in our case. So we had a bank, we had an insurance company, we had a development bank, and we had a lending partner. And we structured something around these so everybody would take their own risk. It took us a year, because when you go to see the banks, everything that was said before is true. They don't like the risk, they want to limit their exposures and all that. We structured it around it. And when we talked about the risk of the client, when there's always a way to mitigate that risk, but the way we mitigate it is through a funding approach, with essentially bundling all these clients together, and you mitigate the risk by having many. So we raised the first $200 million around that, and that's been a success, and we implemented projects. And I'll give you one example of the things we transformed. We had one client that I'm going to name here because it's a very successful project, but still at the beginning, it was challenging. We got to IBM. So you know IBM, a blue chip company, very rich company, can pay for everything if they wanted. Alex said it, energy efficiency is not core business. And they told us something. We have a 2.5-year payback project in our books. We will never invest in it because it's 2.5-year payback. And the payback for IBM worldwide on non-core projects is 2 years. We came with a solution where they don't have to put any money up. They don't take any technical risk. We manage the grants for them. So you'll think it's funny, but in Canada, we have so much grants that grants are becoming a barrier. Everybody wants the grants. No one wants to spend the time to get the grants. You manage all that together, and we implemented the project on a 15-year basis where we actually triple the benefits to them without them having to spend $1. Based on that success, we're currently concluding a $1 billion fundraising to do exactly the same thing and continue to do what we do. Because essentially, it's not a money issue. And I'll explain to that about the case of France. So when we came in France through one of our funders, which was the insurance company, who worked with a fund that's called Mirova. Mirova is one of the biggest climate change funds in Europe. And when we talked to them about this, what we had as an experience in Canada, they said, look, we want to be invested in energy efficiency. We have billions of dollars invested in climate change mitigation, all in renewables. We want to find a way to get into energy efficiency. But we don't want to go 1 million at a time. We don't want to go at 10 million at a time. We want a big ticket. So that mechanism fit them. They introduced us to the government of France, who said, well, we want to push as well for energy efficiency, but we're stuck because we don't have more money to invest into it as a government. But what we'll do is we'll invest in a vehicle, which will not be a grant, but will be essentially money that will actually repay us with a return. So we got ADEME. ADEME is the Energy Efficiency Agency of France. And then we got all these partners on the banking sector, BNP Paribas and La Banque Postale and different ones. We actually raised over $200 million of debt with them. And they all said the same thing. We want to be invested in energy efficiency. We don't know how. We found a vehicle. They don't take the technical risk. They don't take the marketing risk. They have big tickets, and they essentially have something that a return of is interesting. So the point is that even in mature markets, even when there are ESCOs, even when there are banks that are willing to play a role, the market is still not perfect because the client don't want to take a loan. The ESCOs don't want to borrow money to implement the projects. The client are reluctant to take all the steps to actually implement the project. We have to come with a solution that we make it easy. We make it simple. We make it, they don't need to use their cash. They don't need to do something else instead of core business. They have to do energy efficiency on top of everything else. And that's what we try to accomplish with what we have done. With globally, what we will have done is essentially over the last 5 years to raise $1 billion, invest over $250 million right now, essentially created a totally new market for ESCOs, where now they can play a role in the private sector, only to be only dependent of the public sector, launching tenders, and hopefully that they will win it.
Very interesting. Thank you, Pierre. And now, Sohaib Al-Marzouki. I hope I pronunciate the name, your name correctly. You're the head of Business Development Department at TACA, the Abu Dhabi SuperESCO, a public sector-led initiative in a high-capacity market. From your perspective, what is a key success factor others should take note when considering the value of a SuperESCO?
Well, looking at the perspective in Abu Dhabi in particular, funding was not an issue. And energy efficiency projects were, as Alex said, were like not looked at properly from the government organizations. One being the tariff is relatively low. We are talking about 0.8 or 8 cents per kilowatt hour in the government sector and 6 cents per kilowatt hour in the commercial sector, which is a bigger market. So these were big challenges. And our biggest, let's say, issue was to change the behavior of people and onboard them of the ESCO business model, of the Super ESCO. How do we work? How's the performance guarantees? It was a new concept that took a lot of time, and still it's consuming us a lot to onboard all of these entities into adopting ESCO projects. We were lucky that ESCOs were there in the UAE before we were established. We were established, by the way, in mid-2020, because there was another Super ESCO in a neighboring city, Dubai, which had its fair share of projects in Dubai in particular. So we had that. We were lucky that we have a good number of ESCOs. We're talking about almost 30 ESCOs, multinationals, local ESCOs. And, but the challenge was how to onboard the client, how to get the projects moving forward. We had one of the most successful project was with an educational institution, basically a university, one of the biggest universities in the UAE, whereas they were following a very low tariff, 6 cents. And we made a very successful project, and this project moved into 2 to 3 phases. We covered all the campuses, and it was a success. So our major success was to have that mind shift. That was the success that we can brag about and say that we can do more projects. Then we started, because we were created to cater for the government entities, we started approaching the government sector, which was the toughest. We have our number one enemy, if I can say, is the facilities management companies that are in these facilities. They always claim, okay, why should you bring an external party to do energy saving project for you? We can do it in-house if you provide the necessary money. These guys will come and they will show the flaws that you are having in this building. So rather than helping us in doing our business, they became like a stumbling block for us. So this was one of the issues that we had, but we fought our way. We worked hand in hand with the government, being we are a product of a government initiative at the end of the day. We received a mandate, an exclusivity mandate for all the government entities to be working with us. This helped us a lot in accelerating the pace. Before, it used to take us somewhere around 1.5 years to 2 years to close a contract. Now it's much less than that. So we're talking about 3-4 months now. So this helped us a lot. So the government mandate was the biggest success for us. But still only on one market, which is the government. But the commercial sector is a different animal that we are trying to find solutions with. So our biggest success was the mandate. Of course, you have to have enforcements, you have to have mandates. Otherwise, you'll be just a side business that you will not be looked at the end of the day, because each organization, they have their let's say, core businesses, they have their priorities, and energy efficiency is not one of them, unfortunately. So this is what I can say. Enforcements and mandates and awareness, ongoing awareness marketing is pivotal. That will grant you a successful business at the end of the day.
Thank you, Suhaib. It is a very nice bridge to jumping into the panel discussion. And the first question is to everybody. So please raise your hand. Why do we need a Super ESCO in the first place? What gap does it fill that governments, commercial banks, nor traditional ESCOs have not been able to close on their own? And because each of you represents a different type of Super ESCO, private, public, from different market context and region, I assume that your explanations might be quite different, and that is exactly what makes the discussion interesting and valuable. So who would like to start? Why do we need a Super ESCO?
Well, we need aggregators in the market. We need aggregators for equity capital and not be 100% reliant on debt finance. We need an aggregator that would be attractive to debt providers, to commercial banks, and possibly use project finance at the scale of the portfolio instead of having individual $1 million, $2 million, $3 million ESCO performance contract deals, which are unable to raise their debt and equity capital at that scale. So in the case of the Philippines, this is the funny history. I was still with the Asian Development Bank, and in fact, we engaged Econoler at that point to prepare a Super ESCO business plan for the Philippine government. So Econoler was just everywhere, right? But there was no traction, there was no interest from the side of the government. Maybe they could not 100% comprehend, or maybe they did not have the technical capacities at that point in time to understand the business model and carry it out. So it was the lack of attraction, the lack of interest and willingness from the government. And, of course, I've joined IFC, then I returned to the private sector. Then I said, if government won't do it, maybe I should do it. Maybe the private sector should do it and fill that gap. So it took me 7, 8 years to design. I consulted ESCOs, I consulted funders, I consulted possible investors, both local and foreign investors, and came up with Climergy. So there was a lot of trial and error in the beginning. But to answer your question, why? Because I believe that every market, as long as you have enough ESCO market maturity, should have an aggregator. And that the presence of an aggregator will help and accelerate the growth of the private ESCOs in that market.
Thank you. So we have the first reason, aggregation.
I'll build on it. On the financing side. It was very interesting in all the panels today that everybody keeps saying the same thing at some point, but differently. We need standard contract. We need credibility. We need access to financing, and the banking sector is all saying the same thing. Well, we need big tickets. So you always hear the same thing, and you have to come at some point to the reality that you're not going to change that. You're not going to change the banks. You're not going to change the client. You're not going to change everyone. You just have to adapt to them. So Super ESCO, and we don't like the concept of Super ESCO because it's not super, it's not better, it's not, no, you're an ESCO and we're a Super ESCO, we're better. It's essentially a vehicle that enables to address these barriers. And the standardization of the contract, you can wait for the government forever to do that. Or you do it by yourself and you standardize it through a mechanism. You go to the bank and you say, we are standardized it, we are bringing a market to you. Are you willing? Now, you said $50 million. That's what you said? Okay, so we'll give us $50 million and we'll deal with it. So you essentially adapted to everyone. Another thing is credibility, and I've heard it quite a lot this morning, and maybe that's one of the points. Well, if I'm an ESCO, and I'm going there, and I say, I'm going to promise you something, you say, yeah, but you know, how are you going to measure the savings? I'll do it myself. Okay. And based on what? Based on the protocol that I invented. That's even better. And how, and a lack of credibility. Now, we come in France with the government of France. So, start to be credible a little bit. In our model, in the model of most of them, we have external experts to do the measurement and verification. It's not the ESCO, it's not the bank, it's not the client, it's not even us. It's someone else who essentially says, yeah, these savings are there, so either you pay me on the savings that are there, either I go back to the ESCO and essentially pay me back. So there's no need for a super ESCO in the sense that that's the goal. That's just the mean. That's just the way to get it, because the market is what it is, and as frustrated as all we are about government not doing this, banks are not reacting, and they don't want to finance my wonderful $250,000 project. And the client who says it's a 5-year payback project, too long. You get frustrated, so you try to find a mechanism. So that's one. Is it perfect? No. There are still gaps into it. But at least that so far, it's one that addresses these barriers, and the one, you talk about aggregation, I would talk about trust, confidence for all actors.
So we have aggregation, we have standardization, we have the availability of tools on the market. Mehdi, can you top?
I wanted just to underline the standardization, because our investors wanted to invest in energy efficiency, but the only way to do it is to do it in our fund, which we standardize all the contracts with the clients. They cannot finance each project. So we are doing that for them and allow them to finance energy efficiency. For our clients, Pierre said it, we know that they will not do these projects because it's not their priority. It's not, the payback is too long for them. We know that they will not do that. The ESCO, they will not finance these projects in Morocco. The ESCO that we have, they don't want to finance these projects. So we are doing that for them, and we are giving them projects to do. So, and all is based about the standardization of these contracts.
So what I would say is that... Okay.
We hear you.
Okay. What I would say, in case of Trinidad, in a low tariff environment, even lower than Abu Dhabi, what the role the Super ESCO is playing is bringing the market to the clients, bringing the ESCO market to the clients. It's connecting the clients with the ESCOs, and also assigning the risk to the people who are best able to take that risk via the contracts. So assigning the technical risk to the ESCO, taking on the financing risk, and assigning and making sure the contracts are standard as mentioned before. So in Trinidad, I see the main role of the ESCO there is developing the market and pushing the energy efficiency market and ensuring that clients and the ESCOs are brought together and everyone is able to operate in this environment.
Yeah, I can add to that is that the Super ESCO can bring the technical expertise, because we do the tendering on behalf of the asset owner. So we bring in three or four ESCOs to go and tender on an X project. So I think there's a uniqueness about this, that this is special projects. It is very difficult for clients to manage. So we're doing this on their behalf, and at the same time, we're enabling ESCOs to have more projects. So we're trying to bring in as much ESCOs to have projects, and at the same time, safeguarding the client from the tendering point of view, from looking at the scope of works, and make sure that these are the ESMs that will be fitting his property and will help him achieve the saving. So I think we play both roles from the client perspective and from the ESCO perspective to bring more projects to them as much as possible.
I would add capacity building in the ecosystem on the market. or building a trust between the public and private sector, which is a huge barrier in my experience, but also designing or making available financing with better terms and conditions, even leveraging the private investment capital, which is very linked to the aggregation. So SuperESCO is a superhero.
Well, yeah. But I like to add there, Lana, that no one is, the point I made earlier, that no one is really investing in preparing projects. And that's the painful part, you know, how you wish that, you know, rooftop solar projects are coming to the doorstep of the banks. But not cooling efficiency and lighting projects, they don't just come up to the doorsteps of the banks. Someone has to invest in resources in preparing the projects. And the most expensive portion would be the investment grade audit. Who's coughing up the money for that? So there's a better chance for a super ESCO to build capacities, and you accelerate the capacity building of the smaller ESCOs, because I encounter in Climergy, for example, I encounter a lot of good prospective ESCO partners who can only do a level 2 audit, but not an investment grade audit. So we coach them, we train them, and we tell them this is what we're looking for. They don't even know how to prepare a financial model. They're very good in engineering reports, but not to model it. And so we're giving and developing skill sets that never existed in the small mechanical engineer, electrical engineer consulting, becoming an ESCO one day. So it's that. And there was a point that Clara made earlier in the Global ESCO Market Report. There's several single technology ESCOs. And why? Because in most cases, they're manufacturer-owned ESCOs. So if you're a manufacturer of a chiller, you don't expect them to be bundling lighting. And so they'll just stick. For them, an ESCO subsidiary or an ESCO business unit is just to create incremental sales for that manufacturer. But they're not there for multi-measure, multi-technology ESCO contracts. So the one advantage or the one aggregation concept that a super ESCO can actually deliver is to, like for example, I have an industrial client. So I have a chiller ESCO, an HVAC ESCO. I've got a compressed air ESCO, and I've got a lighting ESCO. And the bundling of technologies, it now becomes a multi-technology, multi-measure because of the super ESCO measure, engaging single technology ESCOs.
Thank you, Alex. I will change the plan, the order of my questions, because you were explaining something that it fits very well, despite the comment of Csaba today. So it's often said that energy efficiency isn't sexy enough for banks. Too complex, too risky, too small. What makes the super ESCO model more attractive for banks and financiers? What are the key mechanisms that help de-risk this project and turn them into bankable investments?
I'll try to give it a spin. We've talked about creating a private sector super ESCO. We're currently spinning it to a public sector super ESCO in Canada, because essentially the public sector saw the private sector and they say, hey, that's not a bad idea to do something like that. So in east part of Canada, we're working with municipalities. There are 1,000 municipalities that we're going to work with. You can imagine that each of these municipalities going to the government to have them finance a project and tender it, and you would have 1,000 tenders, and you would have ESCOs answering those tenders, will never happen. All these projects are going to be very, very small if you take them one unit. So essentially, the public sector ESCO has also one very unique benefit on the financing side as well as on the client side. They're able to eliminate the fact that each entity has to bid by itself and go through the procurement process. They're essentially bundling them and bringing project to the market that, answering your question, is big enough for the bank to be attractive, and for the market itself to be interesting enough to bid on. So that's one thing. The other thing for the banks is, we say they don't like risk, they don't like risk. That's exactly right. They like to understand risk. They like someone to say, there's a risk, and here's the answer. Well, banks are not technical partners. So even though you want them to take a technical risk, they will never do so. We bring a group of experts that are based in corporations that are able to sustain the risk. If I talk about Siemens, if I talk about Dalkia, if I talk about Johnson Control, talk about the big companies, of course they're able to sustain the risk. The smaller ones are also able to do so at a smaller scale, but because they have very good engineers and they have a methodology. But if you look at it at a bank, they say, well, I don't understand it. They're all different, and I cannot get it. You go through a vehicle, and that vehicle is taking the risk. So essentially, that makes it a lot more interesting to them. So yes, standardization, but I think on the public sector side as well, that bundling and eliminating all these barriers about procurement, and we saw the case of Ukraine and all that, they bring a program together and they say, it's going to be done like this, and then the ESCO say, okay, now we have a market, it's always the same thing, it's always the same approach, it's always the same, and the same from Abu Dhabi. You structure the whole thing, it becomes attractive for bankers, but it becomes attractive for the market. And that's why they mentioned that they have no ESCOs in Dubai at the startup, and when you got in, there were like 20 ESCOs because there was a market. They created, and Abu Dhabi created a market.
But in addition to this, don't you think that if you aggregate, if you bundle, you can basically introduce a new technology on affordable prices and drive the market to improve in more efficient equipment?
Well, I'll let the other talks, but just one sentence. If you have a bigger market, price will go down. If you buy 10 lamps, there's going to be a cost. If you buy 10 million lamps, it's not going to be the same cost. So if you start a market and the market is getting bigger, all ESCOs will benefit because the technology will cost less. So you have to trigger that market one way. So public sector will do it their way, private sector will do it their way, but at the end of the day, everybody's winning because the cost will go down, so there's more savings for the same dollars invested.
Mehdi, would you like to add something regarding SuperESCO and the banks too risky, too complex, too small? Yeah. I think we all already said a lot of reasons, a lot of elements.
Yeah, yes, I think the most of elements have been said to share what we are seeing in Morocco is that bank does not know how to finance energy efficiency. I think it's the case in the other countries, but especially in Morocco, we know how to finance renewable energy. We have done that since 10 years. There is a process, we know how to do it. And what we have seen in the field is acting as a super ESCO is a great opportunity to finance energy efficiency projects. And we believe that with the first project, we can raise enough money. And money is not a problem, bankable projects is.
Then let's go to the next questions, which is related to facility owners. One of the biggest challenges we see in our experience is that the facility owners often don't prioritize the energy efficiency, either because of budget constraints or lack of capacity. How does the Super ESCO help bring these facility owners into the picture and make energy efficiency projects easier, faster, and more attractive to them to implement?
Well, I can try again. When we designed the whole thing, we spent a lot of time talking to clients because at the end of the day, whatever you design, if they don't like it, it will not work. So we interviewed like 200 clients and we went to them and say, what about if we were offering you a project and you don't pay for it? What about if we come and we will essentially guarantee the savings? What about if? And we were always going and added up things. And we saw that at some point, the decision makers are not attracted to energy efficiency, they are attracted to making money. So if you come and you try to sell them a chiller, However you present it, however you say it's the greatest thing on earth, they don't want to buy a chiller. They'll buy a chiller when they need a chiller. They have a chiller. Why do you want to replace the chiller? So we try to approach them with another way. Do you want to make money? Okay. How much money do you want? Well, would like to make money without me investing anything. Okay, that's pretty good. So what's the return on investment on $0 investment and you make money out of it? Well, beat it. Then we said, okay, what about if we give you 15% of the savings that we generate over 15 years? So we're essentially writing you a check every year. You like it? How are you going to do that? Well, we may replace a chiller, but you don't want to know. You don't care. So at the end, we try to transform it into a financial transaction and not a technical transaction. Still, even though our projects are 15 years and are bigger and the 15% represent money, it's still not enough. At some point, we feel that there are still barriers. So we're thinking now, and maybe I'm going to give you a clue of where we're heading, we're going to pay them to do the project. So instead of having the 15% that you pay them every year, we're going to actualize the money and give them a check up front. Now it becomes very tough to say no. Because I come to you and I have my little suitcase here and I have $500,000 there. I'm going to give it to you. If you let me replace that darn chiller that you don't want to change. So the lesson was that when you talk to decision makers, not the engineer, not the technical person in the boiler room that really wants to change that chiller. He's not the decision maker. He has no power to have the CFO actually say, I'm going to do that. So we talk to the CFO. And the CFO understands one thing. What is the end result at the end of the year on that balance sheet? So we try to switch it and essentially come to an offer that is not technical, but which is financial. That's how we try to address the market now, not on a technical
But you're
way.
talking now about the private Super ESCO. If I translate it to the public Super ESCO, the CEO would be the government. So the government could make all the public-owned facilities to implement energy efficiency projects in the best efficient way.
Yeah, so, and I'm going to let the other talk, but I love that question. On the municipal sector, what we had 5 years to fight with the government to change the regulation to enable the technical debt that will come with the project, they will have to pay outside of their balance sheet. So now I go to see a mayor and I say, you know, you want to build a park? Oh, you can build a park, no problem. You want to plant trees? You can do that. And I'm going to do something on top of it that will not prevent you to do anything else. So by the way, I'm going to give you 15% of the savings, and every year your budget is going to be reduced, but you'll build your park, and you'll plant your trees. And you're going to receive something in return, which is a reduced amount of cost that you'll be able to re-inject to win the next election. Ah, that's pretty good. So we try again to change it. So it's on a voluntary basis in Canada. If we talk about the case of Saudi Arabia, they've done another way to do that, and I think their way was interesting as well. But in our case, you cannot oblige a municipality. But when you come with an offer that they cannot refuse, likely they'll do it. They'll do it.
I think Alex would like to.
Not the municipal. I'd like to revisit Pierre's concept of turning it into a financial transaction. The typical ESCOs that we work with, yes, their focal points in the customer would be the engineers. That's correct. Procurement, most often. The Super ESCOs focal point, if not the CEO, it's going to be the CFO. Because we are giving a long-term financial solution to your facility. They don't care if we're using magnetic bearings, oil-free chillers. They don't give.
They don't know.
They don't have to know that. But we're giving a financial solution. And then we're bundling different technology solutions now on a long-term contract. So we have overly convinced one big property developer, something I talked about earlier. One big property developer now has been overly convinced by a Super ESCO that it now wants to divest all its properties, existing and proposed, those even in the drawing board, all chiller assets, all HVAC and chiller plant assets are now being divested from its books and asking Super ESCOs to buy out their assets, operate them, and sell them chilled water at a negotiated price in the next 20 years. So that's a Super ESCO transaction. That's not a typical ESCO where you replace your chiller with more efficient 0.7, 0.6 kilowatt per ton. That's an ESCO conversation with an engineer. A Super ESCO it's more a financial transaction, a long-term relationship.
Maybe I wanted just to add, when we go to visit our clients, what we say to them is that we know that we will not do this project, but not doing anything, you will lose money. When we come a year after, we tell them that for this year, you have lost $200,000. You want to lose another year, we can go for it. So not doing anything, it's a loss of money.
Yeah, or decrease in competition, because the competitor maybe will do the energy efficiency and his product will be cheaper than this.
One of the things I would say, Lana, is that one of the things we have seen in Trinidad is that the clients, they want to reduce their greenhouse gas emissions, they want to do these projects, but they don't have the capacity internally to do it. And that's where the Super ESCOs come in here. We come in to project manage the project for them. We're developing the RFP, looking at doing tendering for them, and also managing the implementation and the monitoring and evaluation afterwards, which is what the client doesn't know how to do themselves. So the Super ESCO comes in there and provide that technical support for the clients and support them in ensuring that they reach their goals, whatever reduction in greenhouse gas emissions that they want to get, and helping them get those things implemented.
Very good. I wanted to have 15 minutes for questions from the audience, so I will skip the last two questions just to give the opportunity to everybody. If anybody has a question, please raise your hand. Ciao. You will get the mic.
I'm coming on to the benefits of the Super ESCO. And I think that maybe it's not for this panel, but there is one key element, which I have not heard of any of you. We are sitting only in Europe, anywhere, and who's counting 11 to 13 trillion euros lying around on Carlos's and on my and on everybody's bank account, earning zero. There is one of my boys always tells me, "Daddy, it's your fault that I can't invest into any energy-saving projects." And he is entirely right, because he needs a product which he can book into his securities account. Now, all of these gentlemen have got, after a certain time, 2, 3, 4, 500 million, who's counting, which can be securitized, a yield pickup achieved, and sold to various investors who are sitting, as we all know, investors are sort of in one pocket, or not all in one pocket, but various pockets. But this yield pickup creates a product which we can give to our investors. And there's another point which, as of lately, I have understood. We are having a regulatory capital issue. For an Econolaire and all of these which are alternative investment funds, let's call it private equity. You're being audited two ways. Once by Pricewaterhouse, and he says you've done everything right, tick. And then you've got the national regulator at your investor level who looks and says, oh, on the Basel III and Basel IV, this is private equity. Haircut 50%. Now, if you repackage this and sell it on to investors, you de-risk, B, for the same investor who then buys the bond, which is probably listed now, the haircut is only 10% maximum. So what is happening here is actually providing food to the investors, finally, that they can put money into this. And this is what I love about this discussion, and I thank the ESCO network for facilitating this, because this is just fascinating to listen that various pockets of product is being created for the capital market.
At the same time, you didn't listen to me very carefully, because at the beginning I was mentioning that the SuperESCO is supporting in gaining access to finance, is designing innovative financing instrument, blending private-public capital, leveraging, etc. But thank you, and you're absolutely right. Federico.
Thank you. My name is Bahadur from Istanbul. And I have two questions to the participants. The first one is their experience about collateralizing all these investments, because SuperESCO is, bringing finance from banks for these energy efficiency projects, which are most of the time are tailor-made and integrated into some other systems that you cannot never take them back, and it will be useless, maybe. So how you are collateralizing all these assets, and what are your experience on this one? And my second question is, as a Turkish person living in a high volatile economy, fluctuation of currency rates, inflation, interest rates, doing ESCO business is really something crazy. It's not easy. It's not easy. And, do you have any experience about interest rates? I mean, decreasing interest rate times or increasing interest rate times, which is more attractive to customers to make investments with ESCO model? How do you comment on these two things?
So let's start with collateral. Do somebody want? If not, then I will try.
I can try.
Okay.
We don't collateralize at all. Pretty good, right? So we essentially give, in our case, and it's not the case of everyone, but in our case, we transfer the property to the owner, and the only guarantee we have is the contract. So we essentially are a subordinated debt, and we don't take any collateralization. How we mitigate the risk, and that's the limitation of our model, is we take very safety client. So when you go in the market and you say, well, this client has a tremendous amount of energy efficiency, very often it's tremendously not financially sound. See? So we're not going after the best technical project, we're going after the best financially sound client. And as we have these clients that are very sound, IBM, for example, then you don't need to collateralize it. So we don't expect to take back the chiller and all that. In the interest rate, in our case, we securitize it by having the lending. Alex is not doing it like that. We take our loans up front. So we fix the loan today with the bank, and then what we added up in our model, though, is the increase of energy rate. Because if the rate is going to increase 5% a year, and you have a 15-year contract, you can imagine the impact. And that's the risk that the client has to take. So we negotiate with them. We say, well, do you want 0% interest rate on the energy, or you want 15%? Well, if you want 0%, that's perfect, but I'll do a smaller project. But if you want a 10% per year, because you accept that's likely going to happen, you'll have a bigger project. And you see all the benefits go along, because you replace assets, they don't have to pay for it, they have bigger savings and all that. So that's the answer. We don't collateralize at all in our case.
In case regarding the collaterals, the private ESCOs company that are looking for financing, and usually the commercial banks are requesting a collateral which the ESCO companies are not able to provide, the task of the SuperESCO could be to support the private companies to have collaterals for the financing of the ESCO project. And for the interest rate, what I see in other European countries, that as soon as the country has grants, not to use them to distort the market, but to use them to provide, for example, a concessional loan, subsidies of the interest rate for energy performance contracts, and so to leverage the private investments, because you cannot offer more cheaper financing than the market. You will distort the financing market otherwise. Alex, I think you would like to say something.
Well, we don't collateralize either. We get from our equity pool, we invest in the assets, and that sits in our books. And so that's why we say it's off the balance sheet of either the ESCO and the customer. And the kind of investor that we are targeting at the moment are large energy developers who are moving away from coal into renewables, and then say, hey, developer X, we have a new investment asset class. We have a portfolio of chiller plant upgrades across shopping malls. Would you be interested in a $50 million portfolio? And so the assets would sit in their books. So it's a different dynamic. Now, whether they want to blend it on a project level, if we are to create SPVs for 20-year supply contracts, and then blend it with debt finance, that's a different story. But again, that's at the scale now that project finance works, and not at the singular chiller plant upgrade, typically below 5 million. That won't work. So we operate a bit differently from Sophia and the rest of my co-panelists.
There is a question on the... Okay.
Oh, behind you.
Yes, no worries.
Nevertheless, now you have to ask something. No, just a joke, please.
This is Ziad Haddad from the Association of Energy Engineers. Thank you so much for the amazing experiences that you have all shared, and for the very inspiring initiatives and futuristic initiatives that you're taking. My question is also from another hat that I'm wearing. Actually, I'm coming from Lebanon. Abu Dhabi, Canada, very blessed, very privileged countries, and great for the work that you're doing. And I wonder, maybe there's no straightforward answer there. What would other, countries that have political unrest, how do we make things work in such countries? And there are plenty around the world. The example of Lebanon is a place where you have a lot of technical expertise and a lot of private initiatives. But, there could be war, there could be economic collapse. So to give you an example, a few years back, educational institutions who had been there for 150 years, so older than IBM and very stable, very reliable, were about to close. So with a very dynamic population, with lots of technical know-how, lots of initiative, but a total absence of government and security. I would love to hear your ideas about how to make long-term contracts in such places.
Well, the only first answer that I would have is we have a wonderful webinar on the Global ESCO network from Ukraine, which is a country that when they came to us and they said, well, we have a sustainable ESCO market, you said, scratch your head again, and you say, what? So we have that wonderful webinar that explains how they've done it. They've done it for the public sector. They got an involvement from the government, so absence of government I would not know. But go back and I listened to it twice because I was pretty amazed at what they were able to do in a country which has such problems, and they succeeded. So there's no answer that are easy, but there's a tremendous example just there, so you can talk to the representative of UNDP, but that webinar is pretty impressive. And you can go on the Global ESCO network, it's registered.
I have a slightly different reply to that. Yes, it's going to be a challenge for a war-ravaged economy to introduce new models would be really a challenge. But on the flip side, for those economies without a war, with all the economic uncertainty and headwinds coming our way, aren't we all in a war right now? It's just, we just have to push forward no matter what headwinds are facing our markets right now to decarbonize regardless of all the economic pressures and headwinds and market forces that are coming our way. Yes, there are uncertainties when there are war, but there are uncertainties even in big markets, even in North America, even, you know, so it's something, it's a given that we have to manage those risks regardless of the geographical and economic situation.
Yes, the gentleman on the right.
So, Mustafa Anzi, through the discussion, I heard about energy efficiency, about solar, about cooling as a service. At the same time, if you look at the market, there are both public and private entities that are committing to net zero targets. You have hotel groups that want to be net zero carbon by 2040, 2045. So, and that can be achieved by let's say, a basket of solutions: energy conservation, energy efficiency, solar, carbon offsets, etc. So what would be the role, actually, of the super ESCOs in helping those public-private entities achieving their net zero targets? And again, should the cell be done differently? Because we came to the conclusion that it should be a financial cell. But if you have net zero targets, what would be then the selling pitch?
Well, in one case, in Climergy is working, one of our investors or equity partners is in a conglomerate. So together, we come with their offerings and our offering. We offer energy capital and solutions. But we have a more holistic, so they provide green energy on retail electricity supply contracts. They also do large-scale renewables. So we can now have a more holistic decarbonization package, and that's the advantage. Another advantage of a super ESCO is at that scale, if you're talking of $100 million portfolio, then you can talk about climate funding, concessional finance, development, blended finance, and other climate structures that would de-risk a portfolio, and even carbon finance. So it's something that would not be achievable at the scale of a sub-$3 million deal, because the transaction cost of any innovative climate or carbon finance would be disproportionate at that scale. But at the scale of $100 million portfolio, it becomes more achievable.
And I would say that we contribute to it at some point. And in the case of Canada and France, we're limited to 15 years. But in the case of Belgium, where they're going to launch a tender pretty soon, they go to 30 years. So when we go to this kind of range, then and you know, in Europe, the big challenge is insulation, because the buildings are not insulated at all. So if you go to 30 years, then likely you will achieve these kind of things. Then what we enable our client as well, if they have such ambitious goal, then they can as well contribute to the funding. So we can contribute 70% through our system, and they can contribute 30%, and they achieve their goals. So we have limitation. I'm sure in 5 years' time we'll sit here and we'll say, yeah, what we were doing in 2025, we're doing a lot better today. It's going to evolve, but our limitation is 15 years. I would love to see 20 years, 30 years. Belgium is doing it. Some other countries in Europe are going there. So I think we can contribute. Can we achieve 100% of what they want? Maybe yes, maybe no. We have our own limitations, but we can certainly contribute quite a lot.
We are already above our time. There is one more question And one more. So 2 questions.
Okay, thank you so much, and thank you for all these informations shared. My name is Mam Kumbanjai. I'm from the Energy Efficiency Agency of Senegal, and we are working also on a SuperESCO program in the country. So I have 2 to 3 questions that I would like to ask. The first one is, yes, we have heard a lot about all the benefits that we can get from SuperESCO, particularly from also public SuperESCOs for public projects in countries. But I'm wondering why, until now, the interest around public SuperESCO is still very, very weak. And I would like to ask, according to you, to your experience, and to the public SuperESCO that you have, with whom you have been in touch, if you have to point out 1 to 3 key elements, which one do you think that should be key roles that those SuperESCO, particularly public ones, should play that they are not yet playing properly? The second question is related to the context where we have, at the same time, Energy Efficiency Agency, and that we plan to implement SuperESCO. Since we know that natural role or mission of energy efficiency agencies are also to aggregate EE projects in countries, and either in public or private sector, do you think that that is really relevant in this kind of context to create again public SuperESCOs? Are they not going to weaken the energy efficiency agency, or should we try to see how to change or to pledge in order to look at the energy efficiency agency's status to enable them act as SuperESCO instead of creating new entities in countries? And the last question is related to the ESCO and SuperESCO. In some countries, I have heard that ESCOs are, I have heard and I have seen that ESCOs are well operating. And we may not have SuperESCO in this kind of context. So I would like to know, in these situations, if you have not real concern on public projects, and that the ESCO market is running well, what would bring, in addition, the creation of SuperESCO?
Well, let me take a first crack at it, and then maybe Suhaib and the
answer
others.
Question number 2.
I like to just to revisit my earlier statement that when we attempted to create a public SuperESCO, the situation was we did not have the right champion in government believing in the business model, wanting to run with the ball, creating a new enterprise, a state-owned enterprise that would be the public SuperESCO. So you've got to find a willing champion who understands the business model and willing to run with it and grow it. So it's very person and situation specific. So I'm talking of a situation in 2009. Now that same company, there's a brand new CEO. Now he's interested. So it's a very timing and person specific situation of finding the right super public ESCO champion in government who would want to grow and face all the obstacles of growing a public SuperESCO.
I can answer question number 2 regarding the Energy Efficiency Agency and their role and how they contradict with the SuperESCO. Based on to my knowledge, I can relate it that it's more like a regulatory role that the Energy Efficiency Agency will be having, which is basically setting the goals of what are the targets for 2030, how they'll be achieved, and they'll be looking at it not from only the ESCO perspective, it will be even beyond looking at street lighting, public irrigation, district cooling, so many things that agency should be looking at. But the Super ESCO will be only focusing on ESCO projects. That's based on my understanding of how the Energy Efficiency Agency works, because I'm trying to relate it to what we have in Abu Dhabi as Department of Energy, which is basically they have all these strategic initiatives, and a Super ESCO is a product of that strategic initiative. Answering question number 3, and maybe Pierre is the guru, of course, and Alex as well. If you have a healthy ESCO market, we believe that there is no need to have a Super ESCO there. If you have the ESCOs are operating properly and you have good projects, number of projects, and it is well taken up, so I think there is no need to create a Super ESCO in that environment if it is already there.
I slightly disagree, slightly.
That's my opinion, sir.
Usually, you say that the Super ESCO, as soon as the market gets matured, well-functioning market, the Super ESCO is going back from this initial role and becomes facilitator, becomes somebody that supports the players, for example, to find more affordable financing, to package, to provide instruments. In this sense, yes. But if you have a well-functioning market, I think the Super ESCO idea, the new scope of work of this Super ESCO will bring even more benefits. You don't see, but we have a message here, which says time is up. We have one question. If it's a short question or short answer. Simple question, long answer. Sorry.
No.
Thank you very much. First of all, thank you for question about Super ESCO. It's a good question. Is it needed? Okay. Due to the presentation, the Super ESCO is the thinking head, decision maker of the energy efficiency projects, making guidelines, framework of the pipeline, etc. So my question is simple because I have no answer from the Google, clear answer. What is the income of Super ESCO in this case? Who covers its expenses? Because he needs a capacity, good qualified specialist, he should be good pay a salary, etc., etc. What is the income? If he has a pipeline and just provide to the private Super ESCO, do your business. What is maybe some relationship between private sector ESCO companies and the Super ESCO? Otherwise, maybe another one.
Should I start? Okay, when I was preparing a feasibility study for establishment of Super ESCO, this was one part of the feasibility study. What are the income sources? So we get 5. First of all, technical assistance. That the Super ESCO is preparing the bankable projects pipeline. Then you can delegate I'm talking about public Super ESCO. Then if the facility owner is delegating the task to prepare and to procure, this costs money. If it's done by somebody else, it will also cost money. Third, capacity building, trainings, which the Super ESCO will provide to the market. Pre-feasibility studies, investment grade reports, energy audits, supervision. So, and then I'll...
Well, in the private sector, in the Climergy model, we were not a public Super ESCO, but a private. So we collect all the cash flows from the customer. and to recoup our investment. And we do that across a portfolio of several projects. So we just buy the solutions from the ESCO. The solution gets fully paid upon completion. And by the ESCO's O&M, we buy their performance guarantee. So they don't take any credit exposure or financing exposure to the project on a long-term basis. And you ask what are the income streams for Super? We collect. So there's no financial transaction anymore between the ESCO and the customer. All payment streams now go to the Super ESCO or its SPV.
Okay, so I can answer in our case. If our investor want 8% return on investment and we borrow money at 4%, maybe we come to 6% average or 5.5% average, we charge 6.5%. In between becomes the earning of the Super ESCO.
So the ESCO company, private company, share its profit with you?
No. We buy it, so we pay the ESCO the amount, but we charge, it's like a bank. When a bank, how does a bank make money? When they lend money at 10%, but they actually pay the money 8%. So that's essentially the spread that where you earn the money. So we borrow money, we have investors, they want a certain return, we borrow money at a rate, and when we invest the money, we invest at a slightly highest cost. So whenever the project returns, we pay our investors, we pay the banks that lends money, we have paid the ESCO, and there's a leftover, and that's that leftover that becomes a revenue.
And for the public sector, you have on one side the savings that you actually achieved through the private ESCO, and on the other side, all the services you provide to the market, you get paid as well.
Yep, that's it.
Thank you so much. Thank you, all the panelists, for the very interesting discussion.
Ladies and gentlemen, it has been what an incredible journey today, and luckily it's on the first day. We have another day tomorrow, but now it's time for the closing remark, and let's hear from Mr. Pierre Langlois again. He will share some final words.
Yeah, final
words.
This one?
Yeah.
So final, because I know everybody wants to go. So in 30 seconds, I would like to thank all the speakers and all the moderators and all of you to attend. I think we achieved our goal at the Global ESCO Network because we had discussions that were deep as far as the topics. We not just talked about topics rapidly, we went very deep in all of those. And I essentially want to welcome you tomorrow because we'll continue that. So resuming everything that has been said today is kind of impossible, so we'll do it on an individual basis. I hope you've learned quite a lot and you appreciated it. Tomorrow, same time and same kind of very, very interesting discussions with the new speakers. So thank you for everyone and have a very good evening.